Bitcoin at most has upside to about 25,000. 25,000 to me is a confluence of major resistance. So I'm going to actually start to look to short it around that level if we hit that in the next couple days or weeks. And then on the other side, there's some opportunities on the short side. Like I started to nibble at a short on Apple today. That's hitting a key gap fill, a technical trend line, and also even natural gas. I mean, there's always opportunities in the market. Natural gas hit the $3 level, which is a major technical support. It's down something like 50% in the last couple months. There's a swing trade opportunity there for a snapback to 360 or so, which again, in this market, you just kind of look for these little opportunities and kind of print money as you go.
Big bank, small bank, I like to make money. All right.
The most recent Bitcoin price analysis is giving buyers the upper hand, as the bullish momentum has gained stability. In the last 24 hours, the price has begun to recover and has risen during the day to the 23,000 level. Yes! For the past few weeks, the general market trends have shown disappointed support, but now the conditions appear to be changing and further recovery is possible if buyers stay resilient in their action. However, the price of the second largest cryptocurrency analysis indicates that a drop in price has occurred today, causing the price to fall to $1,632. The last week has also seen a strong bullish strike, but the bears have once again overcome the bullish momentum and have been effective in ensuring their lead. Please watch, share, and like this video as Gareth Soloway shares his new market outlook. If you are not already subscribed, please consider clicking the subscribe button as we publish frequent content to keep you up to date on the current market.
All right, Gareth, so is this the real deal? I mean, S&P taking, I think it's the fourth swing at 4,000? Is this going to be a home run, or what's going on? We go back to the dugout.
Yeah, so thank you for having me back. It's always a pleasure.
Thank you, sir.
So there's no doubt about it. You got this amazing bullish sentiment out there. Risk on. We see it in cryptocurrencies. We see it in stocks. We even see it in some effect in gold and in oil. But for me, I'm not buying it. I think the market is coming off of this, what I call the January effect, where you had all the tax loss selling taking care of a lot of sellers in December. That kind of makes the markets generally buoyant in January. Then you throw in the mix of the Fed obviously coming down to the wire in terms of just hiking another 25 basis points, maybe a couple more times, and the market's getting that giddiness. Remember, the market looks 6 months out. So they're saying, okay, within 6 months, the Fed's done hiking. What they're not recognizing to me is that the Fed will not be lowering rates in 2023.
We might stop hiking, but we're not going to start cutting.
Yeah, that's exactly right. And the thing is, I mean, it's just common sense in that you have inflation that, yes, it's coming down. The first chunk of inflation, it comes down quickly. That last little bit from 4% to 2% is going to be really, really sticky due to wage increases and all these other factors. And that's going to keep the Fed very nervous about replicating what we saw with Volcker back in the 80s, where inflation roared back. And they're going to be very, very careful not to lower rates until things economically get so bad. And I'm not talking about, 5% unemployment. I think the Fed would wait until probably beyond 5% unemployment before they even think about cutting rates.
What a time to be alive.
Do we follow what the Fed tells us they're going to do? Because the market doesn't seem to be prioritizing that. The market knows they're saying no cuts. We're rallying anyway.
That's right. And the market is just kind of going on this hopium, which you understand, right? I mean, the market has been conditioned for the last 10, 15, 20 years to really always think that the Fed will bail them out, even when the Fed talks tough. And so I think the market is going back to the old playbook of saying, hey, listen, let's react to what the Fed does, not what they say, versus them saying right now they're going to be harsh and not lower rates. And ultimately, I think that's where the market's having a disconnect. But like you said, it doesn't mean the markets can't rally in the near term. I just think we have to be very aware that the Fed, there is going to be a cliff at some point where the market says, wait a minute, yes, the Fed's done hiking, but we're not going to see these cuts. There will be a day of reckoning where they realize that. Yeah, so for instance, I think Bitcoin at most has upside to about 25,000. 25,000 to me is a confluence of major resistance. So I'm going to actually start to look to short it around that level if we hit that in the next couple days or weeks. And then on the other side, there's some opportunities on the short side. Like I started to nibble at a short on Apple today. That's hitting a key gap fill, a technical trend line, and also even natural gas. I mean, there's always opportunities in the market. Natural gas hit the $3 level, which is a major technical support. silver. It's down something like 50% in the last couple months. There's a swing trade opportunity there for a snap back to 360 or so, which again, in this market, you just kind of look for these little opportunities and kind of print money as you go.
Now, the longer term, when it comes to the crypto stuff, you still have some hope, but that's like long term. The real downside targets that we discussed earlier as being possible this year, 10,000 on Bitcoin, etc. Do you still think that is a first stop before your longer term bull case?
I do. I still think that, again, what we're going to see is this kind of regulatory framework be announced. That's going to give a little bit of confidence to bigger investors. But the big issue later in 2023 is that we are going to see the economy entering recession. The S&P 500 probably does take a bigger leg lower. And my thought process is that as risk assets sell off significantly, Bitcoin and crypto will get caught up in that and ultimately see a big hit down. So 10,000 still looking like it's the downside in Bitcoin.
This is the S&P 500. Right now, we are seeing the spiders up about 57 cents on the day. A little bit of an uptick following Friday's big move. Now, the biggest thing to note is that on Friday, we had this consistent kind of grind higher all day long. And the biggest thing to know about this, folks, is that we need to know if this was a real move on Friday or it was an options expiration move. And the difference is really important because a real move means there's real buyers and sellers. A more manipulated move means that the institutions going into options X wanted to raise the S&P, raise stock prices so that certain options that had a lot of puts on them would expire worthless. And these are the games that get played in the overall market. And this happens with crypto, this happens with commodities. You'll see on options expiration Fridays, a lot of this maneuvering. So this is called a wedge pattern. And a wedge pattern essentially is telling us that the market is consolidating in a tighter and tighter range. And ultimately, it's going to break out. It's going to be forced to break out when it gets to a head over here. All right, so the question is, now if we look at this chart side, or do we break to the downside? And I'm going to tell you right now, there's no easy answer here. All right, markets in the near term can try to lure in more bulls by short-term breaking above, kind of getting above this level for a very short amount of time. The bigger question I'll be looking for is, does it confirm? Does it confirm the breakout? If it breaks to the downside, which I believe eventually we will do, that's where you start a bigger decline, where eventually you retest the lows from October and eventually head to my first target of 2023, which is 338 and change on the SPY. That equates to about 3,400 on the S&P 500.
Please share your thoughts on Gareth Soloway's market performance in the comments section down below. If you like this video, consider liking it. If you're not subscribed yet, hit the subscribe button as we put out daily content to keep you up to date on the market. Thanks for watching Crypto Media, and we'll see you in the next video.